A very warm welcome to Money9's special daily market dose Corporate Central. On this show, we get you the everyday pulse of the corporate world. From all the big headlines to tracking details of every ups and downs of shares are put right in front of you. Without further ado, over to what took place in the corporate world today. Billionaire tycoon Gautam Adani's group is looking to raise $1 to $1.5 billion for financing new green energy projects in the conglomerate's biggest borrowing since the group came under attack from US short seller Hindenburg in January. The group recently held a roadshow in Singapore, followed by another two-day roadshow in Hong Kong, talking to global financial institutions for the fundraising, sources have said as per reports. The Singapore meeting was held with 12 global banks like BNP Paribas, DBS Bank, Standard Chartered Bank, Deutsche Bank, ING, Mitsubishi, UFJ Financial Group and Mizuho. Sources reportedly said that in the group's recent roadshows across six countries, the finance leadership team in Adani met the debtors, bondholders, global banks and FIIs and reinforced the strength of the portfolio and the underlying credit quality of the portfolio. They highlighted that there was no rating downgrades in the aftermath of the Hindenburg report and all the ratings were affirmed, with some agencies putting some of the issuers on a negative outlook. And a mega deal has been struck in the FMCG sector. Leading emerging markets company Godrej Consumer Products on Thursday announced the acquisition of FMCG business of Raymond Consumer Care, a leading player in the deodorants and sexual wellness categories in India. The cost of acquisition is up to 2,825 crore rupees. Along with the FMCG business, Godrej Consumer is also acquiring the trademarks of Park Avenue for the FMCG category, KS, Kamasutra and a premium through a slump sale. Through this deal, Godrej's hold in men's personal care and sexual wellness categories gets stronger. As far as Raymond is concerned, it was trying for more than 2 years to sell this business as the group believed that this was a non-core business in their portfolio. Proceeds from the deal will be used to repay debt as well as invest in a lifestyle business. Raymond has also announced to demerge its lifestyle business and transfer it into RCCL, which will be listed separately later. As for this deal, Raymond's share jumped up to 9% in intraday on 28 April, but GCPL shares fell more than 5%. Country's fourth largest IT company Wipro has announced buyback along with the quarterly results on Thursday evening. This buyback will be through the tender route and the buyback price is at a premium of about 19% from Thursday's closing. Earlier in January 2021, Wipro had completed the process of share buyback of 9,500 crore rupees. The company completed its biggest ever buyback of $1.7 billion in 2019. In 2016, the company had completed a buyback of 2,500 crores and in 2017, 11,000 crores. Although the results that have come have been slightly weaker than expected, the company's profit in the fourth quarter increased by 0.7% to 3,075 crore rupees. During this period, income declined by 0.2% to 23,190 crore rupees, while revenue was 0.7%. EBIT, that is working profit, increased by 0.9% to 3,658 crore rupees and margin increased from 15.6% to 15.8%. But after the announcement of buyback at premium, the share has jumped more than 3%. And the market regulator SEBI has banned 3 individuals and life insurance corporation employee Yogesh Garg and his relatives from buying, selling or dealing in securities either directly or indirectly until further order. The case pertains to LIC front running, where the 5 entities confiscated illegal gains of 2.44 crore rupees front running the trades of the insurer. The list includes Yogesh Garg, his mother Sarita Garg, his mother-in-law Kamlesh Agarwal, Ved Prakash HUF and Sarita Garg HUF. All of them were found to be connected through family relations, the regulatory body said in an interim order on April 27th. One of these 3 individuals, which is Yogesh Garg, has been an employee of LIC since 2011. SEBI, in its investigation conducted from 2020 through 2022, found that Yogesh Garg was involved in front-running the trades of the insurer in stocks like Astral, Havells India, Aditya Birla Sun Life, AMC and Bharat Dynamics. SEBI said that as a dealer in LIC, Garg had the knowledge of confidential non-public information regarding the size and timing of impending buy or sell orders of big clients of LIC, which could impact the price of the underlying scrip during the examination period. The SEBI order states that the 5 individuals and entities must square off open positions in any exchange-traded derivative contracts within 3 months from the date of the order or at the expiry of such contracts, whichever is earlier. SEBI has also asked them to pay back the profits that they have made through the transactions and has also banned them from withdrawing money from their bank accounts. SEBI has asked LIC to review its extant process and take necessary measures to prevent, detect and remediate any fraudulent activities. Meanwhile, the people named in the order have been given 21 days to file their reply. Indus Towers is now pushing Vodafone Idea to clear its past outstandings and has ruled out any further relaxation in the payment plan that was thrashed out earlier this year with its key cash-strapped teleco customer. At its fiscal fourth quarter earnings call on Thursday, Indus top management said that while Vodafone Idea has started clearing 90 to 100% of its current dues, the tower company is closely monitoring the teleco's payment patterns and its funding situation to recover its accumulated past dues as per the agreed schedule. Also, Indus Towers, which has rental dues from Vodafone Idea on Wednesday, said that its provisions of doubtful debts as of March 31st, 2023 was at 5,453.3 crore rupees. The company, however, reported a net profit of 1,399.1 crore rupees during the January-March quarter against a loss of 708 crore rupees in the preceding quarter. Owing to weakness in collections, Indus Towers' revenue from operations fell marginally quarter-on-quarter to 6,752.9 crore rupees. On a year-on-year basis, the company's revenue fell 5% while net profit fell 23%. And the improvement in the balance sheet of Vedanta Resources, the holding company of Vedanta Group, seems to be happening at the expense of its key operating firms such as Hindustan Zinc. Hindustan Zinc Limited has turned from a debt-free company to an indebted one on a net basis in FY23 for the first time in more than 20 years. The metal producer gave all its accumulated cash reserves through a special dividend last financial year and was forced to borrow additionally to fund its capex plans. The country's top zinc and silver producer ended FY23 with a net debt of 1,780 crore rupees as against a negative net debt of 17,821 crore rupees at the end of March 2022, while it was sitting on cash and equivalents worth 20,665 crore rupees at the end of FY22. So that was all about corporates in today's show. Now let's take a look at those market stocks which were in action today and also understand the reason behind it. First up, shares of Glenmark Life, a leading manufacturer of APIs, touched a new 52-week high of 525 rupees on April 28. The stock rallied up to 9.5% during the day, and the reason is the company's Q4 results that positively surprised the market. Company's profit in Q4 grew by 48% year-on-year at 146 crore rupees. Company's income grew by 21% at 621 crore rupees. EBITDA during the quarter, that is operating profit, increased by 45.2% to 206.4 crore rupees and margin at 33.2% as against 27.7%. The results were supported by higher contribution from CDMO, better product mix, benefit of a PLI scheme as well as cost reduction. The company's revenue from the generic API segment grew by 15% year-on-year. Shares of Aarti Surfactant saw a jump of up to 17% on April 28 as the company's profit has almost doubled in the results released on Tuesday evening. The company's profit in Q4 has increased from 2.4 crore rupees by almost 96% to 4.7 crore rupees as compared to 2.4 crore rupees last year. The reason behind the jump in profits is the improvement in operating margin due to reduction in raw material costs. Also, during the quarter, income has increased by 4.2% 3% from 151.4 crore rupees to 157.8 crore rupees. Talking about FY23, the profit has increased even faster. During the entire financial year 2022-23, the company's profit has increased by 2.3 times from 5.5 crore rupees to 12.7 crore rupees. The stock has gained more than 65% in the last 1 month on the basis of cost reduction and strong demand. Well, that's all on Corporate Central today, but before we wind up, over to some important corporate events and triggers which may impact the market. Let's take a look. On April 29th, results of Kotak Mahindra Bank will be out and the board of directors will meet to consider and approve the standalone and consolidated financial results of the quarter and year ending March 31st, 2023 period. Also, the board will recommend dividend, if any, on equity shares for the financial year. Also, results of IDFC First and RBL Bank will be released on April 29th. What's more is a central bank board meeting to take place on April 29th, board to consider fundraising for FY24 along with the results that will be released. With May 1st falling on Monday, some major events taking place for the day. India's markets will remain closed on May 1st due to Labor Day. Singapore and Hong Kong markets too have declared a holiday, and Chinese market will remain closed from May 1st to May 3rd. Also effective 1st of May onwards, brokers won't be able to make bank guarantees with customers' money. Well, hope you liked this episode of Corporate Central and got your day's highlights from the corporate world. We'll be back with more new updates on Monday next. Until then, don't miss out on our weekend corporate special Company Nama. That's all from me today. Keep watching Money9.